Hey there, it's Will. I'm going to talk about the ARK funds today, whether it's time to get back into them, or if you're in them, if you should be holding them. One of the reasons why I'm doing these videos is that there's a lot of people I see that are like buy and hold. They fall in love, they really love something, they believe in it, and they want to hold. But then, and everything's going up and everything's great. But then when they start going down, there's a lot of issues there, like emotionally, going online, trying to ask people, should I hold and stuff like that. And what I'm trying to do is combine a little bit of technical analysis with, fundamental analysis to the extent that, you look at things that you're interested in and that you want to get into. That could be cannabis, ARK, technical, innovation, solar energy, crypto, whatever it is. Those things are valuable areas and should be going forward, but combining that with technical analysis just so that you can sort of ride mostly the uptrends and avoid the downtrends or the flat periods that could be. Because as you notice, things are out of favor right now, like tech, with the interest rates potentially going up and capital gains tax, and the sort of the focus on other areas right now. They've also had a huge run, like the tech stocks, so they're not going to go up forever. So anyway, I'm using TC2000, which is a software that allows you to plot the graphs, and I use candlesticks here. So candlestick is shows you, what the price opened at and what it closed at. So if it's a white candle, I have it configured. You see this upward, white candle like this. And the wick here, that the line is where it got to during the day, the high and the low. So there's open, close. This opened, went straight up and closed. And this one here had, opened here, went down, and then up and back down again. So it's called a doji. So candlesticks are important, important to understand as well. You can look at the candles and they send signals. And these are Japanese rice traders use these. I have a link in the description if you want to learn more about candlestick trading. But what I've also got here is moving averages. So this is the 50 moving average. So it's the average of the last 50 days. And then you've got the 21 exponential, and then the 200 is red here. And I use these because they're mostly used by professional investors. There's other ones you could look at as well, but I don't want to go too crazy with the indicators and the averages and stuff. So I'm using price action. I'm looking for higher highs and higher lows. I'm going to turn on the some of the diagrams, the lines that I have. If you want to get a free trial or a $25 off discount, you can check out the link in the description for this TC2000. And I'm using real-time data and the gold membership. And so right now you can see that I'm actually seeing a candle, this black candle here. This is actually today at 6:30 Eastern time. So that's kind of nice. So sometimes some of them, the ETFs, you won't see pre-market price because they're not available, open for trading at this point. But a lot of stocks are. So you could potentially trade in the pre-market if you wanted to, or after the market closes. But so if you look at the ARK fund, we were generally above the 50. There was a little blip here, but the 21 stayed above the 50. So one criteria you could have is when the 21 EMA is above the 50, you stay in. So that means that you're not going to get shaken out here. But if it does drop down and gets back up, you can always just buy back in. There's either a free or a small commission. So people think like as soon as they sell, they're out. But if it closes, you could say like if it closes below the 50, I'm out. But once it's back up above, you get in again. But the 21 stayed above until this point here. So when it closed this day, you could have got out if you know, there's other things you can do to look at candlesticks. So when you see a gap down like this, where it gap down the next day, gap down here, and then this is a gap down. So these are really bad. And similarly, if you have gaps going up, that's a strong signal. So there's other ways you can look at. The momentum here is slowing down. So you see, even though the price is going up like this, you have, I'll see if I don't know if I, so even if the price goes up, you have the MACD, or the price percent oscillator is what I use, going down like this. So when you see like a lower high, this is called divergence. So the momentum is declining, even though it's still going up. And then you get the big rollover. So sometimes it takes a bit for it to be, to be rolling over like that. If you get a close below the 21, like this is a fairly high, strong indicator if it's up above the 21. If you get a close below the 21, you can say, the next day I'll see what happens. And of course it goes back up again. So you wouldn't have had to sell necessarily, even if you're using the 21. And so the summary, the bottom line for ARK is, I wouldn't be getting in, because what happened is we're getting lower highs here. So it comes down, it comes back up, and then it comes back down again. So, and you put a line across that. And what happens is once you break below the 50-day, and then you start to see a recovery, people might get back in, but there's a 50-day called a resistance here. And so it acts as a resistance, so it bounces off that. And then you get down to the 200. So people think, okay, we're getting close to the 200. It's going to support at the 200. And so then you'll start to see an uptick again. But then again, this time it bounces off the 21 EMA. So you see how these lines work really well. Now we come back down, we bounce off the 200 again. So some people trade in between the lines, the 50-day and the 200. But if you're going to short something, you don't want to get it right at the 200, because chances are it's going to be supported. So if you're right here, let's say, and you're thinking, well, I'm pretty close to the 200. I don't want to short because, it's probably going to bounce. But once you get to this point and you see a failure like here, that's when you might want to short for, if you want to get in between here. And then we come back up, and of course we bounce off the 50. And so you don't want to be buying, in my opinion, down here when there's 50 and 21 EMA sort of resistance here and previous highs. Then we came down, we went down, then we come back up, and again we hit the 50. And then people think, well, now it's going to probably support at the 50, at the 200. But now it broke through down even below the 200. And then today, or yesterday, we had this really big up candle. And that could make people think, that the downtrend is over. But I don't do that. That's not how I work. When you have a downtrend like this, below the 50, below the 21, below the 200 EMA, down in terms of momentum, you're down at -4 here on the price percent oscillator. So 0 is kind of that line where you want to be above, ideally. So even though you're seeing an increase here, you're way down below the 0 line on the price percent oscillator. But also, if you look at, I have got a chart here. I've done videos on this called relative strength versus the S&P. And you can see that back here we had this really long, strong relative strength. Once we broke below the 50 and this 21 crossed down. So these are averages for the relative strength. Now we're in this downtrend here. So you can see, relative to the S&P, it's in a really bad downtrend. So I don't like buying like this. Some people try to bottom feed and buy down at 100. And eventually it'll go up, and then you might be, you might have made a good decision, but I don't like the looks of that at all. ARK is kind of is the general innovation fund that kind of covers all the bases. But if you want to get into specific areas, you have space, internet, industrial, genomics, and finance. So another hot area was the genomics. So we had a similar situation, really strong relative strength, uptrend. But then we started seeing lower highs on the momentum indicator, and that would be your first clue to keep an eye out. And then first you broke a little bit below the 21, and then now a complete break of the 50. And so we're broken down below the 50, the 200 now, and the 21. So, it's been quite a while since there was only a short-lived break below the 20. That's, on the March crash. But tech is out of favor right now, tech growth, because of rising interest rates. There's a move to, they had a huge run. There's a move to reopening plays, inflation type situations, materials. I've talked about that in other videos you can check out. But there's other things besides ARK funds that are tech related, like solar, same situation. If you look at, if you look at smart mobility, like vehicle stuff, let's take a look at Tesla, because that's in that area. There's a bit of support at the 200, so we'll have to see, but we're crossing down this momentum. The relative strength is pretty bad. So, we'll see what happens, but nothing exciting happening. So, yeah, there's other things that are not doing great, like cloud computing, all that type of thing. So I'm not interested in that right now, but hopefully at some point, when it turns around, there'll be a nice uptrend, because tech and growth is, kind of where things are going, the innovation, the disruption. But right now, I'm not interested. And that can change within a relatively short period of time. So we keep watching the charts, and we don't try to guess and anticipate, but we just play the price and the charts that are in front of us. If you want to get TC2000, like I mentioned, check out the link in the description. You get a free trial or $25 off. And I've got the gold membership and US real-time data. One quick thing I just forgot to mention, I've mentioned this before, but when you have ARK or any ETF on the screen, you can click on this open component watch list, and then you see all the stocks. So if you wanted to buy the stocks, the best ones within that, and then you can apply your scan to those, so you can filter them based on all the scans that you have. Like I have strong relative strength scans and stuff like that. But right now it's just sorted by, percent gain. So, for example, Palantir had a good earnings recently, and it's there's a little bit of life there, but we're not sure if that's gonna sustain itself. So this is where you want to be riding the trends, on the uptrends above the 21, above the 50, like this. And then you don't want to be on the backside of that when you see the down relative strength, downward momentum. So hopefully that helps you guys. And we'll talk to you in the next video.